It was a great ride while it lasted. Until a few weeks ago, the stock market was a steadily climbing flight with little turbulence. Now it's more like a roller coaster, and you're not so sure about the guy operating it. Dwayne Lindo joins us with more. Dwayne.
Well, that's right, Alan. It sounds about right at times. There were 3 huge Dow point drops this year alone, and what most experts are saying is to be sure of your risks and that you're comfortable with the risks that you're taking.
My M5 sold, or is that still available?
Victor Young has been running BMW and Lamborghini of Sarasota for more than a decade and has seen his share of stock market highs and lows.
A lot of my friends in 2008, 2009, 2010 who were able to get liquid prior to the recession, you know, their net worth went up, you know, astronomically.
Young says he's not concerned with the market fluctuating as of late. He says in order to survive a market that's unpredictable, you have to do your homework.
So I think you just really need to be aware of what's going on and where your money's at, and have an escape plan or some type of a measure in place that in the event you start to lose money in a certain area, where are you going to go?
USF economics professor Michael Snipes says stock prices reflect information about the companies more than anything else.
One of the biggest things that determines a stock's price is the value of the company, or how profitable a company is. So if we expect a company to become more profitable, that's going to show up in its share price.
But the market has seen its fair share of record-breaking lows, a trend that he says can be attributed to the commander-in-chief.
Well, a lot of the things that the president has done, right? Introducing a lot of the tariff actions against China, that introduced a lot of uncertainty into the market.
It was trade tensions between U.S. and China that's been a big contributor to the market's mood swings. But for the average citizen investing in IRAs and 401ks, Snipes says the game is to stay put.
Most people who are going to have those, they're going to be retiring in 10, 20 years. And because they're designed for those long-term, that long-term time frame, even if there's a downturn of 10%, we've still got another 10 years that we can gain all of that value back.
According to Young, even with ongoing worries about rising interest rates and inflation, investors are being creative.
Millennials love cryptocurrency. I think that ship is sailed and it's going to happen. It's a matter of which companies are true enterprises or true currencies that have cash flowing businesses attached, and the ones that do, I think, will squeak through and make it, and I think it's going to impact some other currencies globally.
Young trying to thrive both in personal money markets and on the business end, even if the market does nosedive.
They know it's going to be a battle for market share. So again, it goes back to who's a really savvy business operator who, you know, can position their products, their services, their locations in the right place, because the pot gets smaller.
And Alan, it may be a bumpy roller coaster ride, but remember, it doesn't mean investors should abandon their long-term financial plans.
Dwayne, thank you.